Welcome back to America's Retirement Headquarters, the home of the Retirement Guys formula and America's Medicare Associates with Nolan Baker. 419-794-3030 is the phone number. The website, arhq.com. The latest numbers show inflation is inching down, but not enough for the Fed to cut interest rates just yet. Still, prices on things like hotel rooms, electronics, cars, appliances, they're slipping. And then, well, there's this.
The price of Costco's $1.50 hot dog soda combination will remain unchanged. Costco's new CEO dispelling rumors during his first earnings call, saying there are no plans to raise that price. The beloved $1.50 hot dog soda combo has cost the same since 1985, and that is welcome news to inflation-weary customers. If Costco's hot dog deal kept pace with the inflation, it would be nearly $4.50.
Thankfully, it has not done that. But that relief aside, inflationary prices, they're proving to be stubborn. Is this something that your clients really complain about, or is it a nothing burger? What big inflation fighter can people insert into their retirement plan?
I think inflation is a real deal. I think it's not only a real deal for people that, like myself, that are out here working with a family, more so even for a retiree that's on more of a fixed income. So it's good to see Costco's hot dog staying the same at $1.50. I don't think I've ever had their hot dog though, but their pizza is fantastic, and most of the other things that I get from Costco, I really enjoy. They do a great job, and good to see they're holding prices. You know, when we're looking at it and we're thinking about, what inflation fighters can you put in a retirement plan, there definitely are specific steps and investments that have historically done well throughout an inflationary environment. Number one is if we look at stocks and equities. So historically, stocks have provided strong returns that outpace inflation, really over the long run, whether that's a mix of more domestic or international equities. We've had more relative strength here, I think, in the U.S. for probably the past 5 or 10 years. But stocks and equities are number one. Number two is looking at real estate. When you look at real estate, not only am I thinking about, say, the price of what your house is, but in a retirement account, you can typically have what is called real estate investment trust. They are called REITs. And what REITs can do is they can offer rental income and provide some appreciation to keep pace with and also possibly exceed inflation. In real estate, you normally have two different types of real estate investments or REITs that are out there. What is called private or public REITs. I generally prefer more of the public REITs because of the fact that you have liquidity, meaning that if you wanted to sell that at any given point, since it's publicly traded on an exchange, it makes it fairly liquid. Where the private REITs are going to be less correlated to the overall market day-to-day noise, but tend to be a little bit more illiquid. Next, you have Treasury inflation protected securities. These are government bonds that are indexed to inflation. They can provide a guaranteed real rate of return, and they adjust the principal value based upon the change in the consumer price index. And that kind of also goes hand in hand with the U.S. government's I bonds. We had talked about the government's I bonds over the past couple of years. Those I bonds hitting a high, I think, of a little over 9% not that long ago. It's still fairly attractive over the 6% range. And again, if we look at where the more recent inflationary numbers are at, those tend to be keeping up also with inflation. Commodities, and so investing in commodities, that's going to be things like gold, silver, other natural resources can act as a hedge against inflation. And, as prices tend to rise, those inflation increases. Or in the other avenue, you could have what is called inflation-protected annuities. So annuities can be a confusing topic, but some annuities offer inflation protection features where the payments increase annually based upon the inflation index. And so it's just a matter of, again, having a good understanding about how the portfolio is constructed, the positive and negative of each of those investment choices, and then figuring out what is the right mix for you. Our software that we have, what we're able to do is we're able to look at portfolio optimization. So in our software, what we can do is we can add in a client's mix of stocks and equities and real estate, treasury inflation protected securities, commodities, or indexed inflation annuities, and help them determine what their risk level is and then show them where their portfolio is optimized. We have investors that maybe are a little bit weary of the stock market right now with an election year. Maybe they want to go and put a bunch of money into things like commodities, gold or silver. And so in the software, we can take and we can make adjustments to the equities and move them over into a different category and show what those outcomes would be. The goal of doing that is to develop that investment policy statement that gives you the ability to understand what the probable outcomes are going to be of your portfolio, 95% of the time, and then show you what your average annual rate of return could be over the long term. And then building out that plan is going to be how you can have inflation fighters to put a strong retirement in place. If you want to know if your investments are keeping up with inflation, or if you want to know maybe what should be added or upgraded in your plan to look at inflation fighters, just give our office a call. We'd be happy to put together an investment policy statement for you, give you a secondary independent portfolio analysis, give you the feedback and show you kind of what your numbers look like. Because in the beginning, as I said, inflation really is the real deal today, whether you're still working or in retirement time. And, in retirement time, if you have more of a fixed income off of your investments, you got to make sure that every dollar is working as hard as possible. And not only keeping up with inflation, but also keeping up with the fact that, if you're pulling money out of a retirement account, taxes in addition to that is another major chomp when it comes to your net bottom number.
Truth be told, inflation has always been a factor in retirement, obviously not as magnified as it has been in the past couple of years, but the buying power of your dollar over the course of 25-year retirement in quote-unquote calmer inflationary times still going to decrease. So you've always needed a factor in there to combat inflation. And the way to go about it, the different strategies, it's going to vary from person to person, really depending on your comfort level and what you want to work with there. But that is what you get with the team at America's Retirement Headquarters, that customized plan that is going to work with you. And so if you have questions about the buying power of your dollar going the distance as time goes on, schedule a time to speak with them, have that conversation and see what's going to work best for you. 419-794-3030 is how you get started, or you can go to the website, visit them online at arhq.com.